All right, welcome back. We got our Tesla Q1 earnings, and no sugarcoating this. These are not good numbers, not good earnings for Q1 for Tesla. And, to be expected with all the political backlash, vandalism, protests, and we saw the delivery numbers, they were a miss as well. So we were expecting this, the market was expecting this, but no way to sugarcoat it. These are just bad numbers. So when we look at the revenue, 19.3 billion, which is a miss of $2 billion. Earnings per share missed by 15 cents. Gross margin down, operating margin down, and they are spending less money on capital expenditures. Makes sense. If you're making less money, you're going to spend less money so you don't go bankrupt. Now, they're nowhere near bankrupt, but it makes sense for them to be spending less on capital expenditures, but it does raise red flags as they're not growing and not expanding. No plans for expansions at this time. So looking at the snapshot here, revenue down 9% year over year. Automotive revenue down 21% year over year. The silver lining here is going to be energy, which is still outperforming, up 67% year over year. Services up 15% year over year, but these are just small segments of their business. And a total net profit here of under $1 billion. When we look down at our gross margin, again, gross margins are getting smaller each quarter. So we went from 14% last quarter to 13% this quarter on the automotive gross margin. And then energy did increase a little bit. Services stayed the same. And when we look at our free cash flow and operating cash flow, declining as well. That was an ugly quarter back in 2024, the negative. Okay, so automotive breakdown, deliveries, we've talked about this. 337,000 vehicles. That's down 13% year over year. Production, 363 vehicles. Automotive revenue down 20%. Gross margin down from 14% to 12.5% from last quarter. And they did produce an extra 26,000 vehicles than they sold. So they've got a little bit of inventory there, and that could be bring the risk of more price cuts to get that inventory out of the factories. Now, when we look at Tesla sales compared to BYD, BYD is outselling Tesla 2 quarters in a row. So that's not good. Probably some of that is Europe and China. I don't know where else they sell BYD. We can't get them here in the United States. I don't know if Latin America can get BYD. But they're performing a little bit better than Tesla these last couple of quarters. And when we look at market share for Tesla over US, Canada, Europe, and China, these are all going in the wrong direction. They're starting to slope downwards. So that's not what we want to see, but this makes sense with all of the headlines, all the backlash here. Now, some of the bright spots here, energy, we talked about it. The gross margin for energy is the highest, most profitable segment for Tesla, 29%. They are really doing a great job when it comes to batteries. Gigawatt hour, 1 gigawatt hour for the Powerwall. Megapack doing well also. And when we look at the chart here, this is energy storage deployments. This is a great chart. Very steady grower here for the energy deployments. Now, some of the challenges, concerns, net income down 70% year over year. You've got the price cuts, political backlash, brand erosion. These are big problems here. So how long until these smooth out, or if they ever will get smoothed out? Time will tell. California market share dropped 44% from 54% year over year. Cybertruck deliveries down 50% quarter over quarter. Now they are offering discounts on the Cybertruck as well. They did talk about in the earnings call, they cited the protests as a drag on sales, protests and vandalism. But they did also say that this quarter they had the most amount of test drives they've ever had in a quarter. So people are sniffing around, thinking about it, but not pulling the trigger. So we'll see what that looks like in the future. We talked about China and BYD. taking a little bit of market share from Tesla as well. And we've already talked about Europe sales slumping, and we've talked about the Saudi Arabia pop-up store that happened this month. Okay, so let's talk about some of the moonshots. Full self-driving. Full self-driving miles continues to just increase drastically here. And we do have the Robotaxi rollout coming in June. We'll see what that looks like. So full self-driving, unsupervised, coming to Austin in June. Claims millions of robotaxis by late 2026. Cars already self-driving from the factory to logistic lots. So when it's done being made, it'll self-drive over to the logistics lot. And they did mention that they expect this year in San Francisco and Austin to have some vehicles autonomously delivered. So you can order a Tesla on your phone and it'll drive itself to your house and be delivered instead of you having to go pick it up. So that's kind of interesting. We'll see how many of those actually happen. Cybercab, the two-seater, starting under $30,000. This is really going to be their. They didn't talk about a low-cost vehicle, but this is really the low-cost vehicle that they do mention. They haven't talked about or announced like a Model 2, but supposedly this seems to be their low-cost vehicle. Launch goal in 2026. Prototypes underway in Texas. Now the Optimus robot. They are projecting 5,000 units in 2025 and then 50,000 units in 2026. Now, when it comes to the robots, they do have some rare earth magnets that come from China, so that could be a headwind. That was really the only big piece that they talked about when it came to tariffs. That could be something that is affected. It may slow the production of these Optimus robots. So some key quotes from the earnings call. Tesla's value lies in autonomous vehicles and humanoid robots at scale. Elon did also say that starting in May, he'll spend more time at Tesla now that Doge is up and running. So I think he said he's going to cut back his time at Doge to only 2 days a week, something like that. The new phrase that they were talking about was a future is sustainable abundance for all. That's their mission statement, their updated mission statement. And then we're not on the ragged edge of death, far from it. So their balance sheet is in a good spot to where they can continue to fund Optimus, full self-driving, all these projects that they have. Even with the decline in revenue, they're fine. They'll be okay. But give 10 more quarters like this, and then things will start to look a little bit more bleak. As far as guidance and outlook, there was no full year 2025 guidance. They did say that at the end of Q2, they'll revisit giving guidance as we have some more certainty when it comes to tariffs and what that looks like. They did cite macro uncertainty and political risk as a headwind for this year. And they remain focused on cost cutting, new model ramp up, and full self-driving rollout. Now, again, the new model ramp up is going to be the Cybercab, from what I understand. And they are focusing on cutting costs so they can have cheaper Model Ys and Model 3s. Q2 delivery estimate of around 350,000 to 375,000. In Q2 of 2024, they delivered 444,000, so another negative growing quarter. Probably going to be the theme for the rest of the year is going to be negative growth for vehicles, not what you want to see. They did mention also for energy that their profit margin may get hit a little bit due to tariffs on some of the battery metals when it comes to the energy segment of their business. So the highest margin business may start to see a little bit of a downtick if the tariffs are to stay place as they are right now. So we'll see what that looks like at the end of Q2. Now, real quick, we're going to go over the updated pros and cons and the upcoming catalyst for Tesla. So some of the pros: energy division momentum, doing very well there. Localized supply chains, so they source materials for the factories in Europe, and then they make the cars there. sell them there. They do the same in China and the United States. They source the materials where the factory is, and then they sell the vehicles in that location. So that should help insulate them from some of the tariffs. There's going to be some of the rare earth metals and things like that are still going to be a challenge, and we'll see if they're able to get around that. They did start refining some rare earth minerals like lithium in Nevada, I believe last year. So we'll see if they can ramp some of that up a little bit quicker to have some of those raw materials on hand in the Texas factory and the gigafactories in Nevada. Like I said, strong cash position, increasing their cash reserves to $37 billion, offering financial flexibility for future investments. So they have $37 billion. I think they have about $25 billion worth of bills that they need to pay. So as long as they don't go completely cash flow negative for a handful of quarters, they'll be okay with their cash position. Leadership refocus. If Elon does indeed put more time into Tesla than politics, that should hopefully get the spotlight off of him in politics, and we can get back to being a growing automotive company and focusing on those long-term bets like AI and the Robotaxi. So let's go over some of the cons here. These are the big ones. Declining automotive revenue, not good, down 20% year over year, and deliveries declining as well. Brand perception issues, everyone knows about this. Tariff pressure, what's that going to look like? How long are these tariffs going to be on? What's the extent? How does that affect their bottom line? Operational challenges, they did talk about in the earnings call that they did stop production of all Model Y's production lines across all 4 factories this year. They did it all at the same time to bring out the new Model Y refresh. And so that did contribute to the decline of some of the vehicle deliveries. Sounds, again, it makes sense, but they did produce more cars than they delivered, so there's also a demand problem, not just a factory problem. But they did talk about that. And some catalysts to look out for. We've talked about the Robotaxi launch, the affordable vehicle rollout. Again, that's probably more the Robotaxi. Obviously, the Optimus development and the energy business expansion. So really this quarter, it was bad numbers, but there wasn't a whole lot else to update for the company for the future. It's kind of all the same stuff they're plugging away on. And really the big event's going to be the Robotaxi event. Is that going to be a big flop, or is it going to have a little bit more demand than people anticipate? I have heard that Waymo has been in Austin as well. And if you pull up Uber in Austin and you say, hey, I need an Uber, they'll give you the option. Do you want autonomous Uber, so a Waymo to come pick you up, or do you want someone to come pick you up? And the numbers are looking pretty good that people are choosing the autonomous selection for an Uber ride. And maybe that's because it's a cheaper cost. Maybe people are just curious and want to try it out. But the demand is there for autonomous ride sharing. And so we'll see how well Tesla can roll that out and what that looks like. So that is really about it for this quarter. We can take a quick peek at the chart. Again, not a whole lot to look at here. We're just kind of chopping around sideways. The stock was up today. I don't know why. I wouldn't come in and buy the stock right now today. That's just me. And we are just making, again, lower high, lower high, lower high. But we are holding this this low here of 220 pretty well. But the catalyst to move this up in the near future would have to be the Robotaxi event. Other than that, the numbers were ugly, and there's not a sign of the numbers improving drastically unless sentiment really changes and or they release some new update or new product, or give away full self-driving for free with new purchases, something. I don't know. So, but yeah, so for me personally, haven't bought any stock since last year, and I will look to add if we get under this $200 level. Other than that, just holding tight, and I will keep you guys updated on the Robotaxi event when we get closer. So that's going to be it for Tesla Q1. All right, have a great day. Peace out.